You did it. You sacrificed everything. No vacations, no eating out, no fun, just discipline for years. And finally, you're debt-free, and you just made a massive financial mistake. Yeah, nobody wants to say this, but paying off your debt might have cost you hundreds of thousands of dollars. And the worst part? The people who told you to do it never showed you the math. Stay with me. Because once you see this, you can't unsee it. Debt feels evil. We've been programmed since childhood. Don't borrow money. Debt is dangerous. Pay it off as fast as possible. And to be fair, some debt is dangerous. Credit cards at 20% interest? That's not debt. That's a legal scam. So yes, high interest debt, destroy it. No debate. But here's the mistake most people make. They treat all debt the same, and that's where they lose. Because there are only two types of debt. Debt that drains you, and debt that builds you. And if you can't tell the difference, you'll stay broke even after becoming debt-free. Let's run the numbers. You have $20,000. Option 1, pay off a 5% loan. Option 2, invest in the market. Historically, the market returns around 10%. After 30 years, option 1 saves you around $30,000 in interest. Option 2 turns that $20,000 into around $348,000. Let that sink in. $30,000 saved versus $348,000 created. That difference is called opportunity cost. And once time is gone, you don't get it back. Here's something most people never realize. Banks love when you obsess over paying off debt. Because while you're focused on eliminating debt, you're not building wealth. You're not investing. You're not compounding. You're just giving money back. Meanwhile, wealthy people use debt differently. They borrow at low rates and invest at higher returns. That's the real game. Not avoiding debt, but using it intelligently. Now listen carefully. This is where most people mess up. First rule, interest rate D. Decides everything. If your debt is above 7%, pay it off fast. If it's below 7%, slow down. Second rule, free money comes first. If your employer offers a retirement match, take it. Always. That's a guaranteed 100% return. Skipping that to pay a low interest loan is just bad math. Third rule, build an emergency fund first. At least 3 months of expenses. Without it, one problem can push you right back into debt. Fourth rule, invest before you overpay. If your loan has low interest, pay the minimum. Invest the rest. Let inflation reduce your debt while your investments grow. That's how wealthy people think. Now I get it. Being debt-free feels powerful, safe, like you finally made it. But here's the truth. Debt-free does not mean wealthy. You can have zero debt and still be completely broke. Wealth is not about removing debt. Wealth is about owning assets that grow while you sleep. So next time someone tells you to just pay off all your debt, ask them one question. At what interest rate? If they can't answer that, they're giving advice based on emotion, not strategy. And emotion doesn't build wealth. If this changed how you think about money, share it. Because most people are working hard but playing the wrong game. Imagine two neighbors. Same street, same income, same starting point, same opportunities, same education, same life. Neighbor 1 does everything right. He avoids debt. He sacrifices. He pays off every single loan aggressively. No risks. No shortcuts. Just discipline. By 40, he's completely debt-free. No EMI. No stress. No payments. Feels incredible. His friends respect him. His family is proud. People call him financially smart. But there's one problem. His bank account, almost empty. Because for 20 years, he focused on one thing, eliminating debt, not building wealth. Now look at neighbor 2. Same income, same starting point. But he makes one different decision. He doesn't rush to kill low-interest debt. He understands it. He uses it. He keeps his mortgage. He pays the minimum. And every extra dollar, he invests it. Year after year, no shortcuts, no hype. Just consistent investing. By 40, he still has debt. On paper, he looks behind. But his investment account, over $400,000. Let that sink in. One is debt-free, but financially stuck. The other still has debt, but financially free. Now fast forward to 60. Neighbor 1 finally starts investing. He did everything safe, everything right. But now he's running out of time. Neighbor 2, he doesn't need to work anymore. His money works for him every single day. Same income, same starting point, completely different life. And it all came down to one decision, not debt versus no debt, but at what interest rate? And here's the part nobody talks about, the real trap. At some point, being debt-free stopped being a strategy and became your identity. You became the disciplined one, the responsible one, the debt-free person. And when something becomes your identity, you stop questioning it, even when it's silently costing you years of growth, even when it's holding you back, even when the math is against you. Because now, it's not about logic anymore. It's about ego. And that is the most expensive trap of all. Because wealth doesn't care about your identity. It doesn't care how hard you worked. It doesn't care how disciplined you were. It only cares about one thing. Did your money grow or not? You can sacrifice for 20 years and still lose. Not because you were lazy, not because you were stupid, but because you were playing the wrong game. And that's the harsh truth. Most people are not failing because they don't work hard. They're failing because they don't understand the rules. They focus on safety instead of growth. They focus on eliminating debt instead of building assets. They focus on feeling right instead of being right. And that's why, after decades of effort, they still end up stuck. But now, you see it. Now you understand the difference. So next time someone tells you, just pay off all your debt, don't argue. Don't debate. Just ask one question. At what interest rate? And if they can't answer that, they're not giving you strategy. They're giving you emotion. And emotion does not build wealth. It only makes you feel good while you fall behind. So if this changed the way you think, don't keep it to yourself. Share it. Because there are millions of people working hard every single day, but moving in the wrong direction. And if you think this was eye-opening, well, let me leave you with one final thought. Most people think money is about effort. Work more, save more, sacrifice more. But money was never just about effort. It's about direction. You can run as fast as you want, but if you're running in the wrong direction, you don't get closer. You just get tired. And that's exactly what's happening to millions of people. They're waking up early, working long hours, doing everything they were told was right, but they're not getting ahead. Because no one taught them the difference between being busy and actually building wealth. No one told them that time is more valuable than effort. That one extra year of compounding can be worth more than 10 years of saving. That one small decision, repeated over time, can completely change your life. And that's why this matters so much. Because this isn't just about debt. This is about how you think. It's about whether your money is working for you or you're working for your money. And once you understand that, everything changes. You stop chasing safe. You start chasing smart. You stop asking, how do I avoid mistakes? And you start asking, how do I make better decisions? Because in the end, wealth isn't built by avoiding every risk. It's built by understanding which risks are worth taking and which ones are silently costing you your future. So don't just work harder, work smarter. Because the difference between where you are and where you want to be isn't luck. It's understanding the game. And now, you do.